Hey guys, just looking at GameStop today. So GameStop's been in the news. It had another 100% run from where it was. So it was at like 30 something, 35 to 40 bucks. And today it rose like 100%. So it went to like 100 bucks and then it rose again another 100% after hours. So I think where it is right now, it was like at 175, something like that. So the question is, should you buy GameStop right now? So from a technical perspective, I am a software developer. I'm a data scientist. I guess you could say I'm a software engineer, but I don't really like that term. But uh, basically, from a technical perspective, should you buy GameStop right now? So I always start on the monthly chart. If you're learning technical analysis, I always start on the monthly chart and I go down from there. So the question is, basically, it went from oversold or sorry, overbought. It went from overbought and it crossed out of that zone to oversold. So there's still room for it to come back down. It hasn't even actually closed on a month yet. So you can see that in the next few months it's probably going to keep going down. This default MACD, it hasn't even started to cross over yet. Like, it's still positive. So once that, I can bet you 100% that it's going to make an inflection here to negative infinity, and then it's going to continue down and it's going to keep going down. It's going to have these green bars here going up, positive infinity like it did. It crossed over, went up, then it's going to cross back down and it's going to go down for a couple months. So from a technical perspective, from a monthly perspective, that it's going to go down. So if we let's go to a weekly perspective. So a weekly perspective, it had a little bit of momentum here. You can see it better on the daily, so I'll just show you on the daily. So there is some swinging here, some little bit of momentum. You don't know how much you're going to get, but it went up, right? It went to 475, whatever, 480. Then it came down, then had a series of just sideways movement, and on its way down, it's probably going to have a few little jumps here and there. Like, you can see from a monthly perspective, it's still going to come down over the next few months, over the next maybe year or two. It's going to still come down. They're going to probably have all these news reports, trying to change the board, the CEO. They're going to try to change all the staff, the directors. They're going to try to reform the company. This is a pump. This is the number one pump. It's in the news. People are buying the hype. They want to get in, and it is very risky. This is a risky trade. If you know the market, this is a risky trade because look, if you would have bought today at like what? When it started going up, yeah, maybe 70, 80 bucks, maybe 60 bucks if you're lucky, that you saw that it was going up, so you wanted to buy it. But the problem is, you can't hold it. If you're like me and you want to hold something for a few months at least, you can't hold it because who knows, it'll go back down. Look at that EMA 9. It's at 77 on the monthly. On the weekly, it's at 74. Daily, it's 60. That's not a good sign. 4 hour, it's even less. So you can see that it is eventually going to come back down again. Of course it will. But right now, it still could get a few pops. Honestly, on the way down, as you can see, it'll probably have a few spikes before it continues going down. So it's a very risky trade. If you're a long-term investor, or just even like you're a swing investor, swing trader, it is risky because look, these default settings hasn't even crossed over yet. There is some a little bit of day trading. This is basically, it's a pump. It got pumped again, but you can see there was some momentum on the daily chart, so there was momentum for a little bit of a day trade. If you're trying to day trade it, you might have gotten lucky with that swing, but that could easily have just came back down. Like, nothing's for sure, right? You want to calculate the most probability, especially if you're looking at charts in the day trading zone. This zone, 1 minute or 1 second to 1 day, is day trading zones. Like, that's why I always look at the higher time frames, because that's where that's where the big moves happen. You want to see what's going to happen in the most time. Like you're trying to calculate. So basically there's some room for this to come up. Maybe it might have another spike, a lucky spike, right? Might get pumped. But you know what's going to happen? It's going to go up and come down. So if you think, yeah, well, maybe I can make some money if I hold this for a few days, it's risky. So it's whatever it is. After hours, it doesn't say, but it did earlier. It said it was like 175. So tomorrow, if it opens up at 175, $200, it could go up or it can come down. So there's nothing for sure in this trade, nothing positive. It definitely, as you can see on the higher time frames, there is a lot of room for it to come back down, and you can see that it hasn't even closed below the EMA 9. It should close eventually. It should close below, but it did touch that center line there, and that's where it kind of bounced from the day trading perspective. But there's still a lot of room for this to come down. Look at that. Look, there has to be a negative slope. It has to go down, and then there has to be momentum moving to the upside, right? It has to go negative infinity, then it has to go positive. It has to keep crossing over this line. So look, it hasn't even crossed over yet. So you can bet that in the next few weeks, in the next few months, that it's going to be going down first. So you might get a few day trading spikes here and there, but it is risky. So if you're thinking about buying it, it's your own risk. Like, I'm just here to educate you, just give you an educated perspective from a technical point, because I've been looking at technical analysis for like 6-7 years. So just think what I'm saying. If you want to go all in, it's up to you, but it definitely can come back down pretty quickly. Like it will come down again, but so it came up to here today, right? So, that's pretty volatile. It can come back down. Let's just have a look at the 4 hour. So it's taking off. These are green. This is positive infinity zone. So look, it's in positive infinity. It's gonna have to inflect back to negative infinity eventually. You might get a little bit of more pump back into the overbought zone, right? You might get a little bit of more pump in there, and then once it forms an inflection point back to negative infinity, it's going back down. That's on the smaller time frame. So you have some room for it to come back up. It's kind of 50-50 when you look at it on the day trading perspective. Like earlier today and after hours, it probably was touching this line. It probably even went up. So guess what? It's coming back down. So if it does get pumped up back to here, it's just going to be a huge short. So if you're looking at this from a shorting perspective, then yeah, that's probably a better way to look at this. Because holding this, buying this is not a good, is probably not, it's risky right now. So I just wait it out. If you want to try to wait for it to come back down, wait, touch support and buy it, that is still risky because it could just continue down to where it was before. It was like in the $10 range, $9 range. Let's see if I can see where it was. Like, let's just say 2015, 2016. So it went down to $3. So what do you think is going to happen if something shoots up that high? It's going to get sold off, right? The company's going to get liquidated. People are going to start taking profits. And once bad news comes out about, they get into legal trouble, you can guess where this is going. Like, it's going down. So if you want to take a risk, take a risk. But if you want to look at it as a safe way to invest and where to put your money safely, I definitely wait it out. And if you know what, you want to wait till it comes back to below $10 into $3, in the $3 range, you really want to get low on this company, that's probably the best way to go. Just wait it out. Wait till all the hype's over. Wait till the volume comes down and look for a good entry point. But right now, it's definitely risky. So if you're a risky trader and you're willing to lose like whatever, a couple of grand, 10 grand, 100 grand, I don't know, millions, it's up to you, right? But if you safely want to put your money away, I definitely wait. Because in the next videos, I'll be talking about Tesla and Apple and stuff. So yeah, I hope that helps. Definitely there's room for this to come down right now. As I said, and there's definitely room for these to cross back over. And there will be another buying phase, so this phase will come back when it was, negative infinity. That's where you want to look. You want to buy. You want to buy when these haven't crossed yet. This is where you want to think, oh yeah, maybe I'll take a position here when, it's still negative positive infinity. These are oversold. Then that's where you want to look. You don't want to be buying up here. So yeah, there you go. So just hope that helps you with your investing decisions, and I'll see you later.